Hey, Eric here from 5minuteinvesting.com, and today's topic is really about 2020 Stock Market Investing Guide for Engineers. My name is Eric Cito, and I'm the founder of an investing coaching program called Investing Accelerator. So I prepared a short deck to kind of outline your situation if you're an engineer, and what you need to do in order to move forward in the investing world. So if you're an engineer, this video is made just for you. Now, here's your situation. You're an engineer. This means you have a steady income flow and you have a growing income stream. Chances are you are already a manager of some sort, or you are in a higher position as well. Now, when you're working in a company, your company will offer you a pension plan, whether you might have multiple options with manual life or Sun Life. So you can choose different pension funds that can give you a return somewhere between 4% to 6%. So that will depend on a mix of how much bonds or real estate is in the fund versus how much is in equities or stocks. But usually, I don't think pension funds will exceed that kind of return. So you wouldn't be getting anything more than 10%. Now, because you have such a steady income stream, you have saved up some money on the side, and you want to learn how to invest. You're at the stage where you want to manage your own portfolio instead of investing in a mutual fund. Now, chances are you also have a home and you're married. So that is basically a summary of your current situation. So we can jump into your strength. Now, you're a very analytical person. You're an engineer. Obviously, you spend years in university studying mathematics, physics, chemistry, and so on. And if you're starting out to learn investing, you're likely to apply a mathematical mindset to the investing world. So you're going to come across a lot of technical analysis, and you'll likely start as a day trader or a short-term trader. So you're going to find out that it is actually quite difficult to be a day trader or a short-term trader. And but your strength is really around this area. So you're going to be gathering a lot of data. You might learn how to code if you're a computer programmer, and you'll use a lot of technical indicators. So you probably are very into MACD or stochastic or relative strength index, RSI, average true range, and so on. And you're going to try to combine these different indicators together so that it formulates some sort of entry and exit points, and you're going to use stop loss and target limit price so then you control your risk and reward ratio. So these are some of the things that you'll be focusing on as an engineer using analytical mindset. Now, if you're starting out with technical analysis, chances are you're going to be investing in the Forex market, where a majority of the day traders or short-term traders are using technical analysis. So yeah, that's going to be your first choice of the market. If you choose to invest in the stock market instead, chances are you're going to be looking at a lot of tech companies. And when you're looking at a tech company, a lot of times they're going to be losing money or in the process of turning a profit, and they have hyper growth. So then there's good and bad as well. So then let's talk about your weakness. Now, your weakness is really you don't have a financial background, and probably you don't pay attention to financial information. You might have realized that the financial information, which is fundamental analysis, is quite important. So you bought a few books on fundamental analysis, including The Intelligent Investor, or some book about Warren Buffett on compound interest, Snowball, how he manages his portfolio, and so on. So if you are already reading books about fundamental analysis, that's great. And what you're going to realize is that fundamental analysis is actually quite difficult. And that's really one of the reasons why you're learning on YouTube, is that you realize that you have this area of missing knowledge, which is fundamental analysis, news, and so on. Now, because you're using your strength, right, which is your analytical mind, you're going to be looking at a lot of charts and using technical analysis, and you might be relying too much on technical analysis. Now, if you are moderately successful, you're going to be making around 1% to 2% a month using day trading or short-term trading, which is quite good because when you times it out, it's like 10 to 12%, and you're going to try to risk somewhere between 1% to 2%. Now, if you're not successful at your day trading endeavor, then chances are you're losing money, and that can really range depending on how much leverage you're using. So I have seen engineers that lost, that he started with 50K and then he made 50K, and then afterwards he lost 50K, all within 1 to 2 years. So you can see, how much that ranges by making some horrible mistakes in the stock market. And chances are, if you are pursuing short-term trading and day trading, you're going to be spending a lot of time on investing, because you're going to be spending a lot of time looking at the charts. You might be trying to day trade a couple hours in the morning or day trade a couple hours after work or during work. So that's going to be quite stressful. I've actually talked to an engineer before, and she was trying to day trade when she's driving to work. So as you can see, that's actually quite dangerous, and she would miss the trade or miss the opportunity because she's driving and she gets distracted and she couldn't fully focus on the trade itself. So I would say that is one of your biggest area of weakness, is that you will be relying too much on technical analysis. Now, you are getting a low return. If you're getting a low return, and by low return I mean anything less than 10%. If you're getting less than 10%, chances are you're not using options to invest in the market. If you're using Forex, you're probably using some sort of margin account, so you should be getting more than 10%. But if you are not getting more than 10%, then you need to learn something called options. So that is really leverage. It's a form of leverage, and it allows you to multiply your profit. Now, if you are losing money when you're investing in the market, chances are you are tempted to invest in a lot of startups or recently IPO tech companies, which have poor fundamentals. Now, when I say poor fundamentals, I mean that these companies are losing money, they haven't turned a profit yet, but then their revenue is growing exponentially. So these are some very tempting investments that you might choose, but it is actually bad for you and very difficult to make money over the long run. So it's like you're trying to guess which company is going to be the next Facebook. Now, you do have an advantage here in this area because of your background as an engineer, and you have that technical expertise and you know the industry, but because you're ignoring the fundamental side, for you it's kind of hit or miss. Now, here's the opportunity for you. And now, if I have explained your situation correctly, then chances are you have a hole, like a knowledge gap to fill, and that knowledge gap is really fundamental analysis, which is financial analysis. So you want to invest in companies that you know, you like, you trust, with strong fundamentals. Because even if you invest in companies that you know, you like, you trust, but with bad fundamentals, you're going to get burnt in the market. So we don't want that. So you need to focus on companies that you know, you like, you trust. Now, and then afterwards, you need to understand how the big players and insiders are thinking about the markets. And this is usually an area where people ignore because they think, okay, I pick a tech company, they're growing like crazy, they're losing money right now, but they're eventually going to turn a profit, so I don't need to worry too much about it. That is not true, because sometimes, when a company IPO, the insiders or the investment banker will just be dumping that stock because they want to get their hands off that stock as soon as possible. So you need to learn how to think like them, and you need to learn how to read the charts or read the fundamental side of things like them as well. And then if you're not using leverage right now, if you're not using some sort of profit multiplier, then you need to learn how to use leverage. In this case, for the stock market, you need to learn how to use options. You can probably research on how to use options, and if you are looking for what is a reasonable return to aim for in the market, then 30% return is pretty reasonable. So there you go. So that is really your opportunity. Now, right now you have two approaches. Now, one approach is really you can go learn by yourself, and if you're watching this YouTube video, chances are you can go YouTube or Google some posts about options. You can Google some posts about fundamental analysis, and chances are you're going to get confused. But if you stick to it, within 3 to 4 years, you are going to be mastering investing and mastering the financial side of things. So then my guess is somewhere between 3 to 4 years for you to master fundamentals and options as well. So, and make sure you're testing it, right? Because you're an engineer, you're good with working with data, so then make sure you test your investment strategy. Now, the alternative is that you get some form of coaching, whether it's one-on-one coaching, whether it is group coaching, whether it's an online video coaching. You want to get some form of coaching so then you can speed through this area as fast as possible. Now, for my investing approach, I really use long-term investing using stock options, and my target return per year is around 30% a year. If you're interested to know more, you can actually click on the link below. It's actually one of the first link called How to Get 30% in 12 months from the market, and then you can watch it and you can learn how I invest in the market. So that will give you a good idea, and that will give you a head start compared to watching a lot of YouTube videos online. Now, if you are interested in joining the coaching program, you can schedule a call with me and learn more. And if you are still struggling with technical analysis and you want to learn how to set up your chart, I do offer a free module of Investing Accelerator, my coaching program, below for you. It's called a free chart course, and that will help you set up your chart really quickly. So that is pretty much it. I hope you enjoyed this video. I have really laid out your situation for you so that you can make an educated decision and which is a good area to focus your time on. If you have any questions, feel free to leave a comment below and let me know if there's any other videos you want to watch. So that's pretty much it. I'll see you in the next video.